going across to Varsha, who had a truncated conversation with Neogen. Varsha, you started off that conversation, but some interesting factors that you're discussing with Neogen this morning.
Yes, absolutely. They've concluded a joint venture agreement with Morita Investment, I said earlier, and wherein Morita will hold 20% with $20 million of investment, and the joint venture basically they'll produce and sell solid LiPF6 salt. So nothing but they are progressing towards the battery chemicals segment, which is the next growth driver when it comes to Neogen Chemicals. But as I was speaking with Dr. Harin Kanani, who's MD at Neogen Chemicals, let's see what he has to say on the battery chemicals side of business. Hello, Mr. Kanani. So my question to you would be on the battery chemical business, wherein the earlier guidance, which was at 300 crore, but now because of the slowdown in the battery chemical sector, in the battery sector overall, now you are expecting 30 to 40 crores of revenue in FY26 and almost 400 crores of revenue from this segment in FY27. Just wanted to know how confident you are, for achieving this 400 to 500 crores of revenue when it comes to battery chemicals overall.
So basically, there are two parts of the business or the revenue guidances we had given. One part is electrolyte, and the second part is the electrolyte salt, which I mentioned earlier, we are selling to the international market. Now, in case of electrolyte, several of our Indian customers, they started the gigafactories, but the ramp up was slightly delayed because there were some government permissions, which were pending. Now, these customers have received this permission. And therefore, one of our customers who's Ola, who had publicly said that Neogen is one of their electrolyte suppliers. So when we are working with them, they have now guided that they've received the government permission from ARCI, and they will be switching over next 6 months their entire in-house consumption of cells to local production. So now when they make the cells locally, they will need more of our electrolyte. So I think this is the clarity which has come. And there are four more gigafactories which are starting. So for example, Exide has announced that they will start in Q1 calendar year next year. Then, in the second half, you have companies like Vari Energy, Reliance, Amar Raja, and then maybe early 27, Amar Raja and Tata. So there are totally 5-6 of these customers, potential customers who are starting their gigafactories in 2026-27. So therefore, when we look at their ramp-up plans, as well as, Ola's approval and localization, and then their further capacity increase plans to 5 giga and then subsequently 20 giga, we feel that, we should be able, they should be buying at least maybe worth 2 giga, 3 giga worth. So with that, the electrolyte volume will significantly increase in next year. When it comes to so this is only the electrolyte part. And for the electrolyte salt in the international market, the requirement for most of the cell producers in the US is that they need to shift to non-foreign entities of concern sources in 2027. So 2026 is the transition year where they need to start transitioning. So that transition, we were expecting, we had a customer audit where we were supposed to get the final approval, but the customers requested some additional improvements, which we are targeting to complete in the Q4 of the current financial year. So next year, and we already have a provisional approval. So 90% approval of the things they have approved, they have just asked some modification. Once we complete those, we will receive the final confirmation. So then we can start international sales. Also, the bigger plant that we were going to set up in Pakhajan, that will now be set up with Morita Technology, who have more than 25, 30 years of experience in this area. And many of the international customers have already worked with them. So the existing customer approval and the scale up will happen based on the revised timelines. Plus the new customers also post our announcement of the MOU and the JV have speeded up their work, and we hope we will have more customers on board. So I think considering this, we will, so next year target looks very reasonable for us. Also, more importantly, for the full utilization, we had given a target in FY29. that our entire battery capex of 1,500 crore, which gives a revenue projection of 2,400 to 2,900 by FY29. So that we have not changed. That remains on track because we are seeing more electrolyte demand because we are still one of the major electrolyte players with established Mitsubishi technology. And with the JV, we are seeing even more stronger salt demand. So
Right.
our target of FY29 full utilization doesn't change.
Mr. Kanani, talking about your base business, you had 850 crore plan for FY26 in terms of revenue and 950 crore for FY27. This is clear, but wanted to know about the margin because the current consolidated margin stand at around 18%. What is the expected consolidated EBITDA margin for FY26 and FY27?
See, basically, you might know that, March 2025, 5th March 2025, one of our major manufacturing plant, Dahej, had a fire. And, that impacted our plans because otherwise this year we were already expecting 950 to 1,000 crore in the current year itself. Also, with the majority of the capacity down, we had to also make different alternate arrangements, move molecules or something we had to outsource. So those additional outsourcing or moving molecules and approval is what basically caused additional manufacturing costs. And some contribution also came from higher insurance costs because post fire, our insurance premiums kind of got revised. So I think this is what basically impacted this year. So from a top line point of view, it will be basically we are on track to achieve and our guidance remains same around 8. Although we had given a guidance of 775 to 850 crore, we are now targeting closer to 850 crore kind of revenue for the current year. And next year, again, we had given a guidance of 950 to 1,000 crore. So that maintained. We are very confident that next year, once all of these, additional costs and all these will be factored, our new capacity is also ready to start by end of current financial year and Q1 of next year. So we are also looking that once our facility restarts
Right.
in the pharma business, we should be able to achieve, and also we will get full utilization. So we should be able to achieve 18% plus EBITDA margins next year. Now, some of the expenses which we are going to have additional to maintain the business is also covered by loss on profit policies, which are currently not factored. So maybe we feel some of the margins would be below 17, 18%, but our gross margins remain intact. It's only because of these operational challenges, some higher costs. This year margins would be lower, but majority of that, once all the insurance claims are recovered in next year, we would be able to recover. So if I were to look at a 2-year balance sheet, when all these insurance related transactions are over, we feel over a 2-year we'll have a 18% plus kind of EBITDA margins. But yes, some of it will be a little bit less this year, and next year once we complete all the insurance process claims and full utilization comes, you'll see slightly higher one-time gains or something related to insurance. But overall, in a 2 years, we should be able to achieve the 18%, 19% kind of EBITDA margins.
Understood. Also, Mr. Kanani, a last question, a very quick one on that. The organic chemicals still form, 88% of your revenues. What is the target contribution of battery chemicals in the next 2 years?
So I think our guidance is very clear, right? So by FY29, our regular business, let's say we have said 950 and, even if it continues of 10, 15, 20% growth, by FY29, the regular business should be somewhere between 1,200 to 1,500 crores. But by this time, our battery business will be somewhere between 2,500 to 2,900 crores. So the total together, it can be up to 4,000 crore to 4,500 crore. So it's a very tough ask. And the main challenge here is, the battery business, we are scaling very fast. And that's true for anybody in this supply chain. So whether it is cell maker or any other battery related materials. But we feel in India, there is a very good progress that our own homegrown technology cells are now being made at a giga scale and they are getting very stringent ARCI approval. So basically showing that they are safe enough to use. So we are very proud to be members of that. Also, the world is looking for an alternate to China. And India is one of the best places where, you can have an alternate to China with the skill set and the experience we have. So I think both of this.
Right. Well, thank you, Mr. Kanani, for answering all the questions, and all the best for the business.